I believe we are live. So welcome all to this Coperitas webinar. My name is Mike van Vuren, and today we're going to talk about another subject, more to it that we think that it's time to save budget and time. And today I'm joined by my colleague Richard Slimmen. I just saw him disappearing with his webcam. Hopefully, Richard, are you there?
Yeah, I'm here. Can you hear me, Mike?
I can hear you, but I cannot see you.
No, I have a red message in my screen saying that there is an issue with the connection.
Then I believe we're not seeing you today, but we are only hearing you.
Okay.
But, it does not stop us to start the webinar. Welcome. For all attendees, in the sidebar, you'll find a Q&A box in which you can ask any questions that may arise. So feel free to ask questions. We try to answer it all. And any questions we might not answer during the webinar, we will answer afterwards. So maybe it's good to kick off, Richard.
Yeah, thanks. Welcome everybody. My name is Richard Slimmen. Together with Mike, I'm driving Coperitas, which is a software tool. And I think what we encountered a lot of times in practice is that when considering automation and transfer pricing, there's a lot of questioning about what is the actual benefit, where's the business case for using a tool like this. And I think in this brief webinar, we would like to elaborate a bit on considerations that you might have when considering use of automation, and for instance, a tool like Coperitas. I think if we look at the transfer pricing practice from a high level, you will see a lot of different perspectives, a lot of different issues that you need to consider and to manage in order to be, let's say, in control of your transfer pricing. Those perspectives are strategy and design, monitoring and control, compliance, and also controversy. And I think when looking at the last two perspectives, a lot of focus has been and still is on compliance, and it's ever increasing, putting a tremendous workload on tax teams, which is likely to be accompanied by quite some increase in controversy, tax audits, focusing on transfer pricing in multiple countries, and increasing regulations that all come together. So there is a quite urgent need for a lot of tax teams to reconsider their options, reconsider their workload, and whether they have, let's say, sufficient resources and balanced with the capabilities they have available. So I think when we are looking at those total perspectives on transfer pricing, what we call the transfer pricing package from now on, I think that is the overall perspective, and even if it's a lot of multiple perspectives, we see in practice that a lot of focus is being put on compliance, and that has obviously reasons, because there's a regulation in place in a lot of countries that require companies to have documentation in place, but when we consider the relative importance of, let's say, having the documentation in place versus does your policy actually align with the true facts and circumstances of your company, and does it still, after a couple of years, what I would call material compliance, then it is sometimes questionable whether a company would rather want to focus on the material issues, but is drawn into a swamp of trying to comply with all the formal requirements, having documents in place in the right time, in the right place, for the right authorities. So with that in mind, I think it is good to consider as a tax team what your position is, whether you feel comfortable with what the allocation of resources is within your team, and also to start thinking about how to improve or how to let's say make work more easy in order to stay in control.
Yeah, and I also think, Richard, as controversy is not always let's say expected when it comes by. I fully agree with you on compliance that there's the material part and the formal part, and what we always hear around is people requiring let's say the local files and master files, so the paper part of documentation and compliance, and they totally forget about the context and the content of the compliance. And I think one thing to address is that today we're talking about software and automation, that our aim is not let's say to limit on resources internally. So that's the misconception of budget and time. But our aim is to make you understand that if you free up time on the compliance part, so the formal compliance part, then you can spend that time elsewhere within the company and on other value-added work. So I think that's as well my main goal. Do you have anything to add to that?
No, I think I fully agree. A lot of times we almost like hear complaints from in-house tax persons that they need to put a lot of attention towards the formal compliance, towards making sure the documents are in place in the right order, that they are aligned. A lot of people involved, and they would wish that they would have time to actually rethink or evaluate the potential impact of new developments for their company. And that doesn't mean to say that it doesn't happen, but quite often it's sometimes too late or at a very late stage within a certain company, and almost never it's let's say fully optimal because of the let's say the constant pressure on workload, which is increasing almost by the week, so to say. So for us that makes it relevant and urgent to start discussing opportunities to rebalance the workload with the options that the tax team may have available to manage the work.
Yeah. Maybe before we are going to make any assumptions today, we have some polls aligned. So if I'm correct, I can start the first poll. All attendees should see the poll in their sidebar. Hopefully you all do, and you can make a voting on it. And the question of today is that, let's just read it out loud. I have sufficient resources to cover 100% of my TP package. So as Richard already elaborated on, strategy and design. I need to publish it. Hopefully you can vote right now. Strategy and design, monitoring and control, compliance and controversy. So just give your opinion, your actual situation, and we can use these answers to elaborate on during the webinar. So we have 3 questions in total. And now we have a very one-sided answer. Everyone has voted no. So that means that yeah, we have an audience here that acknowledges that not all aspects of the TP package is covered with the current resources. So I will end this one for now.
I must say, Mike, it doesn't come as a surprise, but it is, let's say, quite alarming that that's a 100% score, that nobody feels to have sufficient resources. So it actually shows that it's an urgent need to consider options to at least optimize your available resources.
Yeah, I fully agree, and I think we have some very good, let's say, things to look into today, which might help you, reallocating those resources. Maybe for a second question, that's for managing my TP package, I make use of external advisors for about, let's say 0 to 25%, 25 to 75%. So yeah, please feel free to indicate if it's 50-50, or you make use of a lot of advisory services, 75 to 100%. So everyone feel free to vote right now. See a good distribution. It shifts a bit towards the first answer. So 50% of the audience uses advisory between 0 and 25. Oh, it's actually shifting again. I think I have all answers collected right now. So the end result is that, let's say 30% does perform a lot of work in-house. The largest part, almost 60%, performs the work together with an advisory firm, and the last 10% or 15% outsources a lot of work to external advisors. So I think we see a good distribution here. Do you have anything to add, Richard, to this distribution?
No, I think in general it is according to my expectation. You see a lot of work shared between in-house and advice, and obviously it will always be, I think, in practice a bit of a joint effort. But what you do see is that if you put, let's say, the parties that do a lot of stuff in-house versus do substantial stuff in-house, I think that might show a difference between when we would have taken the same poll like 5-6 years ago, where you might have seen a bit more focus on external advisors. Does it make sense? For me, it does make perfect sense because the increasing workload needs to be managed, and I think it's not just who does it, but also, let's say, the result. When doing more in-house, you gain almost, let's say, simultaneously more insight, more control, and will be able to better take care of developments.
Yeah, I think ultimately it's a balance between cash out to consultants and performing work in-house, and as long as the let's say TP burden, the TP package burden grows alongside your budgets, then you're safe. But I think it's a fair conclusion that that's not the case in reality. So I think there's a decent shift in this one. For a last poll, and that's as well not for anyone, but as everyone stated that their TP package is not covered with the current resources. The last question is, what is the main reason for not being able to cover the full TP package? Is that your available budget? So in terms of let's say cash and money to spend on, let's say, outsourcing activities, or is it available time or available personnel, as well as skilled personnel, or is it not applicable? But the last one should not be chosen that much. I've seen 50-50 come in. So let's wait and see if there are coming any additional answers.
Mm.
We have a couple more right now. So the most of the audience is shifting towards the available budget side. I think we can let's say conclude that most people are experiencing too little budget to perform all the TP work in comparison with the available time. A third is voting on the available time option. And it could be that it's not possible to find any skilled personnel, but that's not what we're aiming for right now. Do you have other conclusions, Richard?
No, I think it all makes sense. At the end of the day, budget and time interact, I think, between each other. But it does clearly show that there is let's say a budget restraint on what a tax team can do, which is making sense. But then you need to at least consider how to allocate your available budget. I think that brings us to the next slide, Mike.
Yeah.
So if we consider a budget as a given, and we all know that budgets do not seem to grow according to the workload that is being growing ever and ever for years now in terms of transfer pricing. So budgets may increase slightly or even reasonable, but still it seems to be less than the actual workload for in-house tax teams. So if you have a given budget and you need to consider how to use that budget, we more or less see three different situations, and we call them focusing on outsourcing, focusing on insourcing, but most of the companies will likely focus on a balancing between doing stuff in-house and doing making use of external advisors, what we call co-sourcing. And I think,
Richard, this was also in line with the answers given, of course. So
yes, for sure. And I think if you think about the developments over time, what we see happening is that the tendency is more, let's say, moving from the left, somewhere in the left, to more somewhere in the right. I think a lot of companies start insourcing more and more work to the extent they can manage it, and it makes sense. But we'll keep using advisors. But we think, and we see the role of advisory changing from doing both value add services and doing more like a routine documentation efforts. And we see the shift within the, let's say, the repetitive work stream within the transfer pricing package, which is like the formal compliance, the documentation efforts. These are being more and more insourced by companies. And they're taking up a lot of time, obviously. So that makes it relevant to ask yourself whether you use your budget the best way possible, because still having companies using external advisors to do repetitive work, which is convenient for one thing, and let's say established over time, we'll need to reconsider, or may want to reconsider, whether that's an optimal spend of money, of the available budget. So we see the shift of moving compliance in-house, regular, repetitive compliance. But then still the workload is in-house and you need to manage it. And I think then automation comes in as a natural second question. How can we make best use of the resources in-house so that we can cover as much as possible from the workload that we need to cover?
Yeah. And I think, Richard, the challenges I experience talking to tax teams is that indeed most of work goes into the quantitative part of compliance, so drafting all documents, gathering all information, and limited part of work is put into the quality of that compliance part. So if you can limit the advisory or the advisory impact on your compliance to only that qualitative part, and you can effectively manage the quantitative part, which might not be the case currently, then you can focusing on other TP aspects of your TP package. Let's assume that for controversy, sometimes it comes in handy to make use of advisors, as they know the tax authorities, and you'll have a good expert opinion on the case. But for the monitoring control part and your strategy and design, I think most companies are very capable to perform that in-house. But currently, due to the allocation of work, I think it's not possible at this time. Maybe we can go to the next slide, where we elaborate on the trend we see. As you're longer in the TP practice, Richard, would you mind picking up this one?
Yeah, thanks. And I think I don't tell the audience much news. I hope, but it's always good to put things in perspective, because you need to understand why things happen. And I think if we look at the transfer pricing practice for a couple of years past and also going forward, I think we have three major, let's say, periods. We have the pre-BEPS period, the BEPS period, and the post-BEPS period. At this moment, we are, let's say, at the start of the post-BEPS period, I would say. But looking at the pre-BEPS period, when you would look at, let's say, overall organization of companies with respect to their transfer pricing practice, you might have seen much more outsourcing relatively than you might have seen at this moment in time, due to a lot of reasons. It used to be a periodically effort to come up with your transfer pricing documentation, but it would be okay to have it, let's say, every 3 or 4 years being updated. And that is something else than when you are confronted with annual efforts that are being required by more stringent legislation and focus from authorities. There may have been less complexity, also, let's say, facilitating that it would have been, let's say, a bit more relaxed to manage the workload. Then we entered into the BEPS period as of 2013. New regulations, much more focus, new interpretations, but from a compliance perspective, much more complexity, but also much more frequency was being added. So that was a period when we, I think, saw a lot of companies increasing, but also due to let's say, limited budgets, the outsourcing with insourcing capacity within the tax team itself. Now we're at the post-BEPS era.
Richard, to sorry for interrupting, but the complexity, how do you see it changing? So pre-BEPS it was a little less complex. BEPS, is it due to the transparency part, or that everyone has more knowledge of transfer pricing?
As always, Mike, I think within transfer pricing, I would say it depends. what you see is that complexity, in my opinion, is a combination of increased difficult regulations. Think of the DEMPI functions with the intangibles evaluation. These are, let's say, putting on top of existing complexities already, pre-BEPS. We have increased transparency measures, making sure that you, as a company, are forced to consider your consistency across the globe in order to have a good storyline. So the issues to manage from a tax team perspective have increased substantially, and not just by numbers, but also from a qualitative point of view. So is that still moving? Yes, that's still moving. It still starts to increase. We have the Pillar 1, Pillar 2 discussions, and it is not nearly coming to an end, I think. That all means that the workload is increasing, the complexity is increasing, which at this moment in time, I think the tendency to insource for companies is higher than ever before. And we try to depict that in the picture. But I think that is what we are looking at. The post-BEPS era is also, in my opinion, likely to show quite some increase in not just complexity, but also in scrutiny. Meaning that if you think back at the overall transfer pricing package, one of the perspectives would be controversy. It is very likely that that part is going to increase substantially over the coming few years, not just because the knowledge is increasing with the tax authorities, but also due to the current COVID crisis, all the war chests of the authorities are empty, and they need to replenish. Yeah. So there is a huge search for money, I think, for the coming years. And it is likely that they will also focus on transfer pricing. So the thing is, with controversy, it is not, let's say, very easy to plan. It just happens, and you will have to deal with it, and it will never come at a suitable moment, which will make sure that you are confronted with increased burden on your tax team. You need to consider, do I have enough time to cover all those audits? That also is an increasing complexity perspective.
Yeah, and I also think that the looking into the increasing of the transfer pricing, let's say compliance burden. If you look into, let's say, the DAC 6, mandatory disclosure, I don't think there's a high potential of, let's say, using automation in that respect. All the evaluations of the transactions under review, involve knowledge and insight in the company and knowing the rule sets given. If you look into, let's say, Pillar 2, there's a high potential of using automation. And if you already familiar with automation and using automation as a tax team, I think also going forward towards the future will give you most benefits of looking into possibilities of additional compliance. And I think that's also a thing I want to discuss today, and that will also be the next slide for today, is that looking into automation, what we experience is that a lot of tax teams do not yet have a good business case for automation. And that's mainly due to that the focus is put on the costs involved of using automation rather than the benefits of using the automation itself. And I think that tax teams are not always familiar, like other departments. So if we look into finance, they work with high-end and very expensive tool sets, BI tooling, very expensive ERP consolidation systems. But Text team is still working with Microsoft Office. So we're, as Text teams, not feeling comfortable by using more expensive tools. And that's what we, and I think it's fully I think it's logically to look into those costs when talking about automation. But I think there are other benefits with it. So if we look into why should you consider automation, you can look into having a central professional work environment, which brings you additional controls. So normally documents and information is scattered around the organization, and having a central work environment enables you to have all information in place and in one system. Which brings me also to the second bullet point, is less key man dependency. What we experience at a lot of companies is that expertise and knowledge is vested in individuals, which makes organizations very vulnerable. And by using software, this enables companies to separate that knowledge from the individual and always have access to the information. So if a key personnel leaves the company, the knowledge and information is still available. And I think that's often forgotten in the business case. Next to that, and that's one thing that most Text teams embrace, is the improvement in consistency, working consistency overall, by setting up a standard process. But looking into documentation, the documentation consistency, in a broader sense. So your storyline is aligned with your master file, and that storyline is in line with the country by country report. So if you look at table 2, those activities indicated are the same as indicated in your master file and local file. And I think that type of consistency and reusing the same data is currently embraced by a lot of Text teams. When you're not using automation, you have to check it every time once again if it's in line, and that takes up a lot of time as well. If you go to the fourth bullet, free up time for all other value-added work, I think that here we look into more quality work. Most transfer pricing professionals are highly educated and have studied to perform the qualitative work or side of work. And I think focusing on qualitative work makes also your work more fun, which on its turn results in a higher retention rate of your Text team. So I think if you have fun at your work by doing things you've learned for and less focusing on the repetitive side of work, I think the people will stay at their jobs longer. And there, I think automation could play a big role by automating all the repetitive parts of work, which are, in my opinion, the less attractive parts of your work set. And then last but not least, the monetary savings. We believe that automation will save money. And there are two ways looking into that. Is the direct part. You will have less external cost. So in the polling earlier this webinar, a lot of attendees indicated that, let's say 50-50 is outsourced, or even a more percentage of the work is outsourced to consultants. I think saving on that part, so you have a less cash out to consultants, That's the first saving. And the second way of looking at it is more of an indirect part. Using automation enables you to perform more work, or at least the same part of work, with less FTEs. And that should not always consist of the highest educated personnel within the organization, because you can also save time, let's say, regarding the finance department, regarding maybe legal department, which provides you with your legal charts. But you can also consider using other personnel which is not educated on tax level. With using the right automation tools, all personnel can support you and the tax function within the company. And we've experienced it with a client of us, which also using the support department of operations to help the tax team with the TP compliance, as they're only using the tool, in this case Coperitas, which does not require skill for some parts. So I think the tool also contributes to the possibilities internally. And for the last part, we've developed a cost savings calculator, because we often experience that it's hard for tax teams to let's say express the monitoring savings part, and they see it as a investment. Before going there, Richard, do you have anything to add to this one?
No, I think you pointed out the major points, Mike. I think the thing to stress is that when you consider as a tax department whether you want to automate or not, and you need to build a business case towards your CFO, for instance, that it is always good to not just look at the direct costs involved, and as Mike said, it's not just an investment. The only rationale I think actually that sticks is that at the end of the day, the net result should be a gain. But I think it's also good to recognize that the gain is not just a cost saving in that respect, because there are a lot of other benefits that may be coming along with the use of automation tools that allow you to perform a better job. That allow you to have more control over what is happening within the organization at the right time, that allows you to respond more quickly to questions, and not just saving time by being able to speed up the process, but also, let's say, managing, for instance, multiple audits in a more efficient way. So the benefits are not just monetary, but we see, and that makes sense also just from a practical point of view, that the monetary cost comparison is often driving decisions. But I think in a perfect world, it should be the combined evaluation of cost savings and, let's say, non-monetary benefits that you seek.
Yeah, I think in most cases, when you look at it as an investment, then the monetary part, will be the largest driver. But what we see in practice is that other aspects we've discussed are important as well, and not many have them on top of mind. But when indicated, most can relate to them. So let's go to the savings calculator. What we have built for everyone at the end of the webinar to try as well is a cost savings calculator based on 3 inputs. So focusing on the first input is the estimation of hours spent regarding compliance. And looking into hours spent, it's not only hours spent by the tax team itself, please also complete this with hours spent by the finance team, providing you with all the financials and maybe already performing some calculations for you. And also include all support departments like legal or maybe marketing, providing you with all relevant documents, legal agreements, maybe the legal tree, which is or might be updated within PowerPoint. All possibilities, but yeah, just try to estimate the total hours spent on compliance. And why compliance? Because we've concluded in the beginning of the webinar that most time is spent on compliance, and that's the first part of your TP package, which is highly viable for automation. Then there's the second input, which relates to the outsourcing cost to external advisory regarding compliance again. Try to estimate that part. You can also try different inputs as well. And the third part, it's the trying to calculate the usage cost of, in this case, Coperitas. There you can indicate for how many countries you would like to use Coperitas for. And that's also relating to the countries for which you, let's say, need to make documentation for. That's the input. And on the right-hand side, we've tried to elaborate, give you two examples of, let's say, an insourcing variant and an outsourcing variant. The middle one, so the left one of the examples, we've chosen 900 hours spent on documentation of a company which is active in 15 countries. So I think that's more of an insourcing example. And the advisory costs are just calculating to 45,000 euros. Which comes down to, let's say, TP reviewing the compliance produced in-house. And on the right-hand side, we see the outsourcing variant, which spans 600 hours on compliance. And maybe, you question why is it not nearly to zero, the hours spent, is that even if you outsource compliance work to advisory firms, you still need to gather information internally, provide all the financial information, and keep track of the process, informing the advisory, doing interviews together with advisory. You're still spending a lot of time, relatively a lot of time, on compliance. In this case, the cost of the advisory is larger, 150,000 euros, and it relates again to the 15 countries. And if we put this up in our cost calculator, then we see that the insourcing variant could save for about 45% in 3 years' time. And the outsourcing variant could save up, let's say, 70%. Of its budget in 3 years' time. And I think it's important to stress out that in the outsourcing variant, companies are spending a lot of their budget on very expensive consultants doing the repetitive work. And that's why the savings in the outsourcing variant is the highest. But this gives you an indication of a small to mid-sized enterprise that your savings could be between the 45 and the 70%, depending on the inputs given, of course.
And I think what is fair to say, Mike, that these are obviously just examples. And there will always likely be a part of the workload that is being performed by outsourced advisors due to expertise and let's say specific circumstances, and that will always be the case. And from the previous poll, we saw that the major part of the participants have actually a co-sourcing model, but still, even if that remains, it is very likely that a lot of, let's say, the repetitive work can be shifted from external advisors to in-house resources using a proper tool.
Yeah, and I also think that the highest potential, and that's the idea behind this, Richard, is that if you're currently outsourcing a lot, you have the highest potential of reevaluating what you're currently outsourcing, and by insourcing it more. And that was also the answer on the third question. Do you think it's due to budget or time? If you're looking into insourcing more activities and you're seeing automation as additional cost, then your conclusion will be that you have insufficient budget. It's not possible, but we hope to give you more of a better insight in that it's not an investment. Of course it is, but by lowering the compliance cost, additional budget will be freed up, which you can spend on a tool which also has a good return on investment. But in the end, these are examples, and hopefully on your right-hand side, a link appears, and that will also be the end of our webinar. I think it's a natural end where you can click on the link and try to calculate your own savings. Just make an indication of the cost, time spent, and look what it could mean for you. And I think it's fair to say if you're convinced by it, we are happy to elaborate on it in a more detailed way with you. So you can as well make an appointment with us. Richard, anything last to say or remark?
No, I think that the main message is that we believe and we are convinced that automating a part of the transfer pricing practice for tax teams actually will save money. Whether that's 40 or 70%, that is even less relevant because it will depend on a lot of circumstances that are specific to a company. And if you want to drill down on what it might mean for you as a company, please contact us and we will be happy to assist you to get a more nuanced view on what it might mean for you.
Yeah. So thank you all for attending today, and we hope to see you next time. And in the meantime, please follow us on our LinkedIn, where we post regular updates on the Coperitas software tool. And we hope to speak to you soon. So have a nice day all. Thank you.
Thank you.